Hello, I'm Dr. Stock, and in this video, we're talking about the FOMC meeting that is coming up today and tomorrow. Well, it starts today. Tomorrow, we find out about that rate hike possibility. And, well, some people say it's a darn near certainty. What I want to discuss in this video is what happens if we get surprised to either side, whether it happens to be this month for the rate hike or maybe even the months coming up for us throughout the rest of 2023. That's exactly what I want to discuss in this video. I do also want to tell you that in this video, I'll be using the Moo app, and if you use the link down in the description, by using my link, you get this exclusive offer for up to 20 free stocks by signing up and making your deposit, and each of those stocks is valued up to $2,000. So make sure that you take advantage of that offer. And also, if you enjoy my commentary and like to hear more of it, you can check out my Patreon exclusives by using the link for the Patreon down in the description. Click sign up and be part of the community that I have over there, and also communicate with me and my other Patreon members in the private Discord. Thank you very much, and let's move right on to talking about the FOMC meeting that starts today. So just a quick highlight, the very first thing that I want to look at is the fact that it is a darn near certainty, 98.8% chance as of this recording of getting that 25 BP hike, and we believe at this point that that is exactly what's being priced into the markets. You can see a 1.2% chance of no hike at all. Now, which one of those two things would be better? Now, the market already has it priced in. We already know what to expect from the market for the 25 basis point hike. If we got surprised with a pause, I think that would signal to the market that something is broken and that the Fed is actually worried, because then they'd be changing their tune in a way that we didn't expect. So them pausing would sort of signal some sort of weakness going on, possibly with the banking sector, that maybe there is more weakness than we expected. Maybe it's less in their control than they expected. So I think that doing a pause at this point from the Fed would send the wrong message. Now, I do believe, I want to reiterate and reinforce that I've been saying since at least February on this channel, if not sooner, if not before that, since my return in January, that the Fed just needs to pause and let things ride out. And they did say that in the last statement of monetary policy. They said that it takes time, and yet time is the one thing that they're not giving it without seeing the full effects of what their tightening has done. So that's something to keep in mind. So 25 BP would actually be good at this point for the stock market, even if we don't necessarily believe that it's going to be the best thing overall for taming inflation, that it is time that would actually fix that, and a free market that would actually make those adjustments over time and let healthy competition take its place. Now, let me bring this back and let's go ahead to June and see what the market's pricing in right now. So as of the recording of this video, June, and actually the most likely thing is that they hike in May, and that for June, that they pause. That's what the market is currently expecting, that we see that pause happen. Now, this is an important thing to consider when we look at that, because right now the market's saying, hey, we think the Fed's going to do one more rate hike, most likely to pause in June. There's a small chance that they do another 25 BP hike. So if Powell comes out and gives that certainty of yet more rate hiking to come up in June after the May reports come out, as June happens, well, I guess we need the April reports in May, and then we also have the May reports in June, and I have those next FOMC meeting dates for you. We can take a look at those as well. That's going to also be significant for us. So if they pause in June, well, that's already mostly expected. No really big effect happening on the markets, most likely by that point. As a matter of fact, May will probably have already shown us that that pause is expected in June, assuming that all of April's reports go well. So we'll see that as it plays out. If we get reports that surprise the upside, especially where inflation's concerned, maybe a tighter labor market, maybe that puts more of a certainty on getting another rate hike happening in June. I think the real surprise would actually come in July. So if we go to July, the most likely thing, there we go, still a 60% chance that we're still between 5 and 5.25% for the federal funds rate, and just over a 1/4% chance of being at the 5.25 to 5.5% for the federal funds rate. So that's also significant to watch. And you keep on seeing that there's a small chance that we actually get a rate cut from what we see in May. So that is something else that's also on the radar. But again, I think cutting before it's expected, I think could actually cause downward pressure on the market rather than upward. And that it would sort of imply that something really happened in the economy that we didn't necessarily expect, or something has broken. So Fed tightening until they break it, it could most definitely happen, and it's something to watch out for. Let's take a look at September. September is still most likely chance of being between 5 and 5.25. Very small chance at this point. I'll raise that up a little bit so you can see this other bar that we have over here. A small, just over 14% chance of being up at 5.25 to 5.5. And then we can see we have this growing chance of a rate cut as the year progresses. So let's just quickly go through November's meeting. So November's meeting, now we peak out at 4.75 to 5. So the most likely thing is that we have a cut there as well. And then finally December, there we go. And that ending the year, the most likely chance right now, although you can start to see a more even distribution as the time plays out, that there's just less certainty as to what's going to happen because it is so far in the future. It's really hard to tell what the Fed's going to do. Are they going to stick to their guns and they're going to do no rate cuts whatsoever this year? We do know that there's a disconnect between their actions and their words, that they try to precede the economy, that they try to precede the market with their words before taking action. That way they have to take less action as a result of what we see in the economy and what we see from the markets. So those are things to keep in mind as we hear them talk. Now, Jerome Powell coming out and speaking to us tomorrow, May 3rd, would actually be something that could most definitely impact the market, especially if he comes out hawkish and say that the further rate hikes are necessary. That phrase could definitely be difficult for us. Now, another word we want to pay attention to is recession. How much, if at all, he talks about the word recession, where he sees the state of the economy right now. Do they see any signs of services disinflation? Do they see any deflation happening anywhere in the markets? Those are all definite considerations as we hear Jerome Powell speak, and that's probably at 2 p.m. on Wednesday, and so that's possibly even 2:30. Let me check the time on that. That's definitely something that we want to listen to because the market will most likely be hesitant between now and then. So I did say that I would show you the calendar. So let me bring up the calendar quickly. Here's the current May meeting, and you can see for June 13th and 14th, we have a little asterisk right here, and that's because we get another summary of economic projections. And I do want to make one final note before we look at the markets, that I do believe that June is going to be that big turning point, that June is not necessarily going to be the best for us. We'll have to see if that happens that way. But I do believe that we really see that change in inflation in June's reports that come out when July happens. So especially the CPI, when we see that come out in July, I think the big expectation is going to be there for a big change in the numbers that we have, the headline numbers, the year-over-year numbers. Given June's inflation that we saw that was pretty rampant in 2022, I think June's reports in 2023, which we'll get in July, are going to tell a much changed story over what we got, that we could start seeing some weakness finally happening in services, especially in housing services. So let me move on from there to the markets. So check it out here. We're looking at QQQ, and you can see for this one that we actually made it up above this resistance that we kept on butting up against. 1, 2, 3 retests of resistance, and then there's a fourth one right there. And then finally, let me bring up my crosshair so we can see the dates. Finally, on April the 28th, we broke up above that. And then yesterday was a very big struggle between the bulls and the bears. Which way is this going to go exactly? The RSI is showing us that we still have some bullish momentum taking place, that we're up above 50, but we're below 70. So not necessarily an overbought territory. There's a lot of talk right now over the fact that a lot of this is controlled by big tech, that because big tech's doing so well, that the NASDAQ is also doing well. This is the Qs, by the way, and we're looking at the NASDAQ or as it tracks the NASDAQ 100, I should mention. It is likely that in the coming weeks that we do actually retest this previous high that we have up here, and I have that marked as 2 to 4% possible upside that we could see by making it to that, or if we follow along this bullish wedge that we have going on here, that we see maybe just that 2%. So we'll see if we do happen to come up against this bullish wedge and then come back and retest support, whether it's the horizontal line here or the bottom of the wedge, and then on the upside as well to see if we can squeak out that last few. And I think that really depends on Apple's earnings, which are on May the 4th. Plus we have the FOMC meeting right in between now and then. So there's a lot that can certainly impact this. I don't know that the FOMC meeting this month is going to be the big one. I think June is going to be a much bigger event, and we'll see what sort of certainty we have by then. I think July is still that big time that we have in the markets where we actually see some major change in direction. So we'll watch out for that. Let's take a quick look at the SPY. So with the SPY, you can see there's 1, 2, 3 retests. And yesterday we actually broke up above, but when we closed, we came right back down to resistance that we still failed to break over this high that we set back in February. This is Groundhog's Day, and that's funny that it's Groundhog's Day because it keeps repeating and repeating and repeating, just day in, day out, same thing, and we failed to really make a solid rise up above that. And so that I think is highly reflective of the uncertainty that we have. So we have this horizontal right about 415. It is possible that we check out that 4,200 level in the S&P. And it is also possible that we come back to this high, just another percent or so above that before we start turning around and heading back down, possibly to come back and treat this as support. And hopefully for the bullish people out there that it does hold for us. And we'll have to see what the economic reports have if it is something that we're going to hold. We do have the 50-day, which we didn't even quite get towards. The fact that we're up above the 50-day and the 200-day and that we have a positive slope on the 200-day tells us that we're actually in a bullish situation right now, that we actually exited this downward slope, that we have this downward trend, and now we're starting to inflect back up again. And the RSI is showing us again some of that strength, and we do have a slight rise in prices going on while the RSI, while that momentum is falling. So we do want to keep an eye on that. If that trickles into bearish territory, drops below 50 and keeps trending downward, that can actually be a reversal for us. So we would just want to be aware of that. So this is the Moo app, as I've told you. And like I said, that link is down in the description for Moo. That is the best offer I've ever seen. Up to 20 free stocks just by signing up, making your deposit. And those stocks are valued up to $2,000 or more. And if you like my commentary and like to hear more of it, check out that link for the Patreon down in the description. Don't forget about that like button. If you like this video, hit the subscribe button to see more of my videos as they come out, and ring that notification bell so you're notified every time a video is released from me on YouTube. I am Dr. Stock, Doctor of Education. We'll see you in the next video.